Good morning, everyone. Coming to you live from AG Capital's Cape Town offices. Let's fire it up. It's going to be an exciting day. We got volatility returning to the markets today. I don't know about you guys, but I'm excited. We had 2.3% off the top of the NASDAQ yesterday. The worst day on the NASDAQ in 11 months. We had the worst day in the last year in the biotech sector, and I think between the two of those are the leaders in the States of late. We had a couple of things that I think could have been, one real thing that stuck out was the durable goods orders, which came out and they were softer. What was really interesting about that is that Treasury yields actually rose on the back of the softer durable goods number. That's really surprising to me. We did have CPI numbers the day before, I think, which were maybe a reason that we could have bounced up in Treasury yields. But I think more specifically, there's some commentary overnight out of some of the Fed officials, got markets a little bit bearish again, a little bit worried about the Fed again, and that I think also contributed. So we had another thing that we had last night was a big bump up in the oil price. Crude oil inventories rose more than expected again. That's not the reason for the push in the oil price. The reason is the conflict that we're seeing right now in Yemen. We've got the presidents evacuated there, and the whole region's looking very unstable. Saudi Arabia and some of the allies bombing them this morning, and obviously taking oil up to recent highs, over $50 again on light sweet. We're just literally probably 7 sessions ago we traded south of 42, so we had about a $10 bounce in light sweet. That's 20% move, and that's obviously significant. We've got gold breaking out through 1200 this morning, so a couple of things happening there. All right, moving on into the Asian session, we had Shanghai, which is our outlier, obviously always does the opposite of whatever the rest of the markets do. Hang Seng hung in there pretty well, actually. We did have the Kospi down. Australia got hit pretty hard, down about 1.5%, led a little bit by the mining stocks. And banking stocks were really the heaviest there. And then we had the Nikkei, which we've seen the yen definitely pull back from the lows that we had seen in recent weeks. And I think that was the first real selling that we've seen in the Nikkei for a while. I think there may be a little bit more left on the table there because we've hit record highs several days in a row, and then all of a sudden the yen really making a relatively hard turn here. So maybe a little bit left on the table there out of the Nikkei. All right, chart of interest this morning, man. There's so much stuff I was going through last night. There were so many charts that we could have shown. This one I thought was really cool. If you look at, obviously one of the best leading indicators in U.S. equity markets are the transportation stocks. Why? Obviously because that's kind of a great leading indicator for what's going on GDP-wise. If you're not shipping, packages and commodities and, goods and materials around across the country, then you're not the GDP, the economy is not pumping. So you've seen a big pullback off the top, and it's happened literally. And let's just have a look at this. So this is going back basically to the end of last year. You can see all-time high close on the Dow Transport average, and then we kind of flirted with it a couple of times. We just made a sharp turn down in maybe the last 3 or 4 sessions, call it 4 or 5 sessions. On the Dow Transport. So, and when I say sharp, we're talking about definitely a few percent. So, some of the leading indicators now starting to flash some warning signs at the moment, and so just wanted to bring that one to your attention this morning. Corporate action, nothing to speak of today. We've got money supply out of the Eurozone. We've got retail sales out of the UK. We've got initial jobless claims in the States, and then we've got local interest rates today as well. So we've got a lot to look at, and right now let's go ahead and get into the maps. All right, the first thing that we'll have a look at here is the Aussie. which is bombing out as we speak. We're trading at 61.80 on the offer. There's a couple things here. I wanted to have a look at one thing. I wanted to have a look at is just totally blown out of already. So we had this big consolidation on a 2-day chart yesterday toward the end of the session. You can see here. Let's just fix this up a little bit. So we had this big consolidation kind of from lunch around toward the end of the day. We came down and actually tested it more or less into the close, but we couldn't really break down. And then, at the very end, they closed spot up 100 points in the auction, and then futures they call it the guys in the short squeeze, and we had futures that moved up 200 points off of the lows. Right into the end. So it took us right back up to the top of this range, having a big gap down this morning. And, I think if we look at this on the daily, there's a couple things that stick out here. We talked about this the other day, guys. We're looking up here. So you can see this is this is the highs. We can back that out, and we can obviously see how clearly that is the highs, right? So we'll go back in here a little bit forward. Now we retested the highs now. This is the second period that we've retested it this year. What was interesting to me, like I said, and I keep talking about this, I actually started buying futures because they looked like they were so clearly going to break out 3 sessions ago. With an hour to go, we were trading 200 points above what would have been a new closing high. And then all of a sudden, we literally failed that at the very end of the session. It was such a poor close. And then yesterday was just a shocking trading day. So a big reversal day there yesterday, and then today a big gap down. I think that the market potentially can really be caught off guard here. I wouldn't be surprised to see some real significant further selling that can come into our market in the near term here. So just be careful around that. I think this reversal that we've seen in the last couple of sessions is very important. Next one we're going to look at. What? Well, maybe it's your headset. Can you guys hear me? Testing. Well, I don't know what to do. I'll just keep going because maybe some people can still hear me. Anyway, so we've got the S&P here as well. It's obviously failed to make a breakout here. What I think is important as well is looking at there's definitely some sort of trend support that we're coming into, which is right around these sort of levels. In fact, I think where futures are trading at the moment is probably right on the level. To me, this level drops. All of a sudden, things start looking really shaky. A couple false breakouts to the upside. A lot of times you get the market dropped frames detected. Your stream quality. Here we go. Anyway, so hopefully we'll have to see how this one plays out. But bottom line is, a lot of times what you get is when you get a breakout in one direction, everybody runs and gets onto that boat, and then if it fails, you've got everyone positioned on totally the wrong side, so the unwind can often be quite vicious. So we've had a couple failed breakouts here. This is not one of them, but in some of the U.S. markets, definitely we've had some breakouts that look like they're failing potentially. If this starts to fail as well, I think you can really get an acceleration to the downside, and you're starting to see it right now in futures. They're really starting to smell this morning, trading down 61.30 as we speak. All right, we'll look at the U.S. dollar yen this morning as well, which is definitely failed here a few sessions ago. This has been a slow drift the other way, and now I think for the first time you're really seeing that we're going to maybe come down and test the bottom end of this consolidation. That this is important because it's a great catalyst in terms of carry trade, in terms of risk trade, and you're starting to see it unwind. I think that's also a bearish thing for the market. Let's look at Richemont. In Richemont, you can see that we've got we had some real consolidation going here between about 101 and 105. That level is starting to look. We've obviously dropped out of that level as we speak. I think our target here is going to be down to about 97 in the short term. So watch this one. The fact that this is failing now as well with with the weak rand and that sort of thing, I think is also significant. We're going to look at Naspers just very, very quickly here. We've shown this chart a million times. We basically closed right at support in yesterday's session. Share got hammered, and Tencent actually held up well, but I think, it was the leading up to this NASDAQ hit that we took last night. I think with the NASDAQ under pressure like that, the way that we're under pressure this morning, we're obviously going to see a lower open this morning. Tencent down about 1.2%, but it's got to close below these levels to really give us a further correction. If we look at MTN as well, you can see MTN here definitely dropping some sort of support on this flag yesterday, looking to give us potentially lower levels. I think a stronger oil price could be a benefit to them, in the medium term, because that's a benefit to Nigeria. We get maybe a stronger Naira, which should be a benefit to MTN in the long term. And last one we're going to look at here is Mediclinic, which is dropping recent lows and I think some sort of support. We bounced off this level several times around 122. We closed nicely below that. Maybe moved for the height of the channel, which is about $8. Could take us down to about 114. And that's it for today, guys. Good luck out there.